You know, during COVID, there were reports of the zombie apocalypse and social collapse. So I wanted to see it for myself. And you know, let's say reports of San Francisco's demise are greatly exaggerated. It's
Right.
hopping, especially thanks to the AI, you know, the AI boom. So
So you're not doing hopscotch over human excrement on the street every day, are you?
not any more than usual. You know, it's San Francisco. It's part of the je ne sais quoi. It's part of the texture of what's going on, right?
Yeah.
So you know, it's and to some degrees it's the gradient between, you know, I'm not saying it's good and I'm not saying it's acceptable, but I'm
Mm.
saying to some degree the gradient of like the world is this world has real problems and
Mhm.
these people are working hard to solve it is really very interesting. You know,
Mm.
should some of that money cycle back, not, you know, back to the people who are suffering? Absolutely yes. And then should there be done more in terms of social safety net? Absolutely yes. But it is an interesting, it's just part of the mix here. It's part of
Yeah.
the
It's quite
yeah.
an interesting juxtaposition, as you put it. You know, you're creating all of this wealth, and you look at California's GDP, like if it was its own country, it would be something like in the top 10 in the world.
Yes.
Yeah, at the same time, you have such rampant homelessness and, drug use and fentanyl addictions and things of that sort. And, the stories about human excrement and whatnot. I don't know how over exaggerated that is. You're obviously in a much better position to comment on that, but it does seem like how are these two worlds coexisting? But at the same time, like I've traveled to places like India, for example, where you don't really have much of a middle class. And it's like you've got the top 1%, and you've got one side of the street, which is huge malls with Prada and Gucci and all these designer labels. And then the other side of the street, it's literally slums and babies crawling around in the mud. So it's nuts when you see that. And one wouldn't think you'd have that in somewhere like California or SF, but to some degree, we have our own sort of version of that in the West.
Yeah, actually, Steve, I don't I'm happy if we've already started recording and stuff, but your mic is quite hot, so I think it's peaking and stuff. I don't know if you if
Okay.
that's normal for how your setup works, but it's a little peaky.
Okay. Let me, thanks for calling that out. Normally it should be fine, but let me just turn the volume down on it.
Yeah, maybe it's just the way it works and it sounds weird in my ear, but so I don't know.
Mm.
I'm usually the one calling out audio issues on my podcast, so I
Yeah.
wasn't sure how it normally is for you.
No, for sure, man. Is that better? Because I am using a different mic today. I'm just traveling as well, but I do have another mic that I can just plug in.
It feels a little, I don't know what the word is. Yeah, just kind of like I'm sure if I was an audio engineer, I'd have a name for it, but it just sounds boomy and like it's over
Yeah.
dialed. By the way, I assume you're gonna edit and curate this conversation. I don't know how this what the show's about. How I don't know anything. I just said let's talk. So I kind of know what I'm doing.
It's the best way to do it. How's that? Is that better?
I think that might be better.
Yeah. Awesome. We'll just do this. I'll
Yeah.
be like a stand-up comedian here with the mic in my hand, although I haven't got the jokes for you, so only halfway there. Perfect. All right, we'll just keep rolling, man. But yeah,
Yeah.
as I was saying, it is quite interesting that there is that sort of juxtaposition. But essentially today, man, I mean, I reached out. Obviously, I connected with you a number of years ago, pre-COVID. At some point, I think it was at a dinner here in Melbourne. You just made your way back from San Francisco, so you spent about 2.5 years over at Uber as
Hmm.
head of product at their developer platform. And
That's
since
right.
then, from what I understand, you've been spending a lot of time advising startup companies. You host the startup podcast, or you're a
Hmm.
co-host of the startup podcast. You guys have been killing it with that as well, though. I mean, like over the past 2.5 years, put out lots of quality content. So definitely recommend people check out the podcast. But essentially, the reason why I reached out and what I wanted to talk to you about today, and we've kind of already started touching on this, is the difference between Australia and the United States insofar as entrepreneurial spirit, ecosystems, and so on is concerned. Because you did post something last week, and I quote, this was on LinkedIn, and you basically said, Australia suffers from an abundance of lifestyle comfort and a scarcity of everything else: capital, market, experienced operators, ambition, etc. So perhaps that's a good place to start. I mean, what triggered this post? Obviously, you've been spending a few weeks in SF. I imagine that had something to do with it, but I'd love to for you to just expound on this.
Yeah, that post really hit a nerve and it kind of went viral and it upset, I think, a lot of Australians. And somebody in the comments said, great job ginning up controversy and hacking the algorithm. And that was not my intention at all. It was not to upset people. It was not to play some but clickbaity game. I thought what I was saying was relatively obvious and pragmatic and straightforward, and I thought it was general consensus. Um, and yeah, and I post so much content, audio content, text content, ebooks, helping people outside of the US, outside of Silicon Valley, and especially in Australia, to think and act more like Silicon Valley startups, meaning high growth, high disruption, venture scale, venture outcomes. And my day job is to work one-on-one with companies to help them with those outcomes. Um, and that content gets, it gets some amount of traction, it gets some amount of love, but it doesn't get that kind of like engagement when I talk about cultural stuff. And people are less interested in upping their game and learning about how to be world class, that it seems, than to like staunchly defend what they perceive to be a personal attack, which it's not. I was talking about a structural problem. I was talking about a systemic problem. I wasn't talking about individual people, or even groups of people. But let me unpack the comments, I guess.
Mm.
Every country, every culture has its pros and cons. Everyone. And I've done a lot of traveling, especially in the last 5 or 6 years. I mean, everywhere: Southeast Asia, Middle East, Europe, US, Australia. I went all around Australia. I've so I'm talking with a little bit of perspective here. And each of these countries has really beautiful, beautiful things to give to the world. I think of the world as kind of like a theme park. You can go to Australia for beautiful sunshine and wonderful people and safe neighborhoods. And, you can go to Southeast Asia for, really cheap beach lifestyle, and cost of living is fantastic. And the people are really down to earth, and, all this kind of stuff. And the service is great. And, you can go to the US, and in US is sort of like a theme park within the theme park, right? You can go to Florida for the beaches, and LA for the Hollywood and the content, and New York for the finance, and Silicon Valley for the tech, right? And obviously these things bleed into each other. These are not absolutes. They're just talking about places, what they're optimized for. And Australia is my home. I was born there. I love the country. I love the people, but it's not optimized Silicon Valley for Silicon Valley style venture scale outcomes. It's just not. It's just
Mm.
not. That's just like on the face of it true, right? And people in the comment threads were happy to jump on down my throat, like, well, we have a safety net, and we have, warm, safe neighborhoods, and so I'll take that trade off any day of the week. Like, I know you will. You've made that trade off, and that's a perfectly fine trade off to make. That's not my point. That is not the kind of trade off that optimizes for venture scale outcomes. And
Yeah.
again, I believe that to be a fairly prosaic, fairly ordinary observation.
Yeah.
And we can talk about why, and we will, I'm sure,
Mm.
throughout the show. But it's just not. That's not what Australia is interested in optimizing for, and I don't think that's what the people of Australia want Australia to optimize for that. And that is not a judgment, or certainly not a negative judgment. It's just an observation and a fact, I think.
Yeah, it's interesting. There's a number of things you said there that I wanted to double click on, but one of which was it's fascinating when you spend a lot of time on content, for example, and it could be a thought piece that you've spent hours and hours on. Maybe it's a blog post, maybe it's a podcast episode. You put it out into the universe and it doesn't perform all that well. And then you would just spur of the moment, 10 words. It's just the LinkedIn post that came to you maybe while you were on the subway or whatever the case is, and it just appeals to the the most base human instincts that people have. They get defensive and it triggers something, and suddenly you just got all of this engagement, which can be nice because obviously you want to engage, you want to raise awareness of these topics, but at the same time you reflect on all the other content that you've probably labored over that doesn't get anywhere near as much engagement. And sometimes it does make you wonder, like, do people, like, do they have the appetite to actually go into the deeper content and spend the time learning and engaging with that, or do they just want that sort of junk food, sort of, yeah, surface level stuff that's just going to appeal to base human instincts and get them just engaging online in the comment section? It's kind of disheartening in some respects, but we do talk about that social safety net that we have here in Australia. Obviously, education, healthcare is very affordable, if not free in many cases, compared to what you have in the United States, where, higher education, I was reading earlier today, uh, the average cost now is about $59,000 per year, plus about $23,000 a year for things like board and downstream costs. So that's $82,000 a year, which for most people is well beyond their financial capabilities. But not only that, an argument is then made as to whether or not there isn't a return on investment on that expense in terms of access to well-paying jobs down the track. And that's a totally different conversation, which we're not going to have today. But in terms of that social safety net, it does seem like a bit of a catch-22. Like, it's great to have. Well, I mean, it's hard to argue with access to healthcare and education. They're fundamental needs. But at the same time, perhaps it does create this sort of complacency amongst Australians where it's like, well, we've got it so good that why work so hard? Like, building, when you're looking for venture scale returns, you're taking on a lot of risk and you're trying to build a company that goes off and scales to the point where it's listing on the NASDAQ 10 years from now. That is a Herculean effort, and most startups don't make it. Failure rates are somewhere up above 95%. So when you have it so good in your own country and the going gets tough, maybe you start off, you have an idea, you've got this optimism bias that's driving you forward, but then reality sets in 2 or 3 years down the track, and all of these sort of red lights and amber lights are appearing, and it's so hard, and it becomes obvious to you just how difficult it will be to make this idea of yours work. It's like, well, I've got it pretty good. Let's, like, quit. Like, what are your thoughts on that catch-22 of the social safety net being an enabler in some respects, because it does free you up to do what you want without having to worry about healthcare and education, but on the flip side, it kind of breeds complacency?
Yeah. So there's a lot to unpack there. So let me try to do it methodically. I think, I fancy myself a liberal, meaning an American liberal. So progressive, not Liberal Party in Australia, which is actually conservative. It's the opposite. And so I really admire Australia's safety net, healthcare, education, what have you, and I believe in it. And I believe that there will, in any competence game, and the world is made up of competence games and competency hierarchies, there'll be people who are better at things and worse at things in the game. And you need to think about how do you distribute access and wealth to the bottom rungs of those people who are less competent just by the nature of their natural born skills or their circumstances. So that, I think, I'm proud of our safety net. And to a degree, the safety net liberates people to be more entrepreneurial, or better, to live better lives, to live healthier, safer lives. And that's a good thing on net for a society at large. And it's if you're measuring the egalitarianness of a country and a culture, and I don't know, that's not a word, Australia's got everyone beat. But you said it's hard to argue that this is a good idea. Well, I can assure you, in America, they argue whether this is a good idea.
Yeah.
And not only do they argue whether it's a good idea, they argue how to arrive at this utopian idea. Is it free market forces, or is it government agencies? Is it, health, welfare programs, or is it pulling yourself up from your bootstraps? On and on and on. And so this is a absolutely arguable idea, at least as far as Americans are concerned. But at a certain point and in a certain way, it does have, it's like a bell curve. It does have a dampening effect on the entrepreneurial spirit, on the move fast and break things culture.
Yeah.
There are less problems to solve in Australia, right? The US, both by nature of its government and by nature of its regulation constraining its private entities, has a lot of problems. And there's a lot of startups proposing to solve those problems because the government's not going to do it. And the government hasn't protected the people from the companies. And so there needs to be better companies, better protections, better what have you. There's also less impetus to solve problems, right? If it's warm and sunny and your mates are playing cricket and they're drinking beer on the weekend and having a barbecue and they're not desperate to do whatever,
Yeah.
like why, you know, most people most of the time will go, I'm not eating into my weekend for that. Like I'm not eating. I'm going to rush home and watch the game, in the evening. And there is less urgency, less paranoia, less need to hustle, which is a very good thing on balance for the majority of society.
Mhm.
Not a good thing if you want to be an entrepreneur and cultivate disruption thinking. Um, and the other thing that's true in Australia is not just the safety net, it's what the safety net engenders, which is like, hey, the government sort of roughly works. Like authority is not a bad thing. It gives us stuff and it works. Whereas in the US, both because of their founding story, which is a rebellion against the British, and
Mm.
because of the reality of their government's dysfunction, they are not deferential to authority. They have this very individualistic culture. And so when they see something is broken, they don't say often, at least not the founders and entrepreneurs here, don't say, well, it's like that for a reason. And I'm sure there's a good reason for it. They go, what? Someone should bloody well fix that. Maybe I should fix that. Like, and so I find that tends to happen less in Australia as well.
Interesting, what you say there as well. I mean, Australia obviously was founded as a penal colony back in the late 1700s. So one wonders how much of that sort of deference to authority
Mm-hmm.
still characterizes how we behave generally as a society. And perhaps some of this came out during COVID and lockdowns and our deference to authority there, and to just kind of take it as a
Yep.
so to speak, versus what you saw in perhaps some American states like Texas, which perhaps is a little bit more, I suppose, libertarian in many respects, and they were much less inclined to shut down the way perhaps more small L liberal states like California were, and that obviously plays into your character and mindset and whatnot when it comes to things like business and deference to authority. And I've got a stat here with respect to unicorns per capita, and this should probably come as no surprise, but the US has creates about 7 times more unicorns per capita than Australia, or has created. So it's about 703 for the US versus 9 for Australia. And of course, the US's population is about 13 times bigger, so that works out to about 7 times more. So when we talk about behaviors, characteristics, mindsets, things like tolerance of ambiguity, embracing failure, comfort taking risk, comfort standing out from the crowd, which
Mm-hmm.
flies in the face of that, much bemoaned sort of tall poppy syndrome we have here in Australia. These are things
Yep.
that sort of stand out to me. And given the time that you've spent in the States, Chris, I mean, what are some of these sort of key characteristics or behaviors you see between sort of typical American entrepreneur versus an Australian one when it comes to, you know, tolerance of ambiguity, embracing failure, and so on and so forth?
Yeah, the way I summarize this, at the root of most of this, not all
Mm,
of it, but most of it, is the difference between scarcity and abundance. Okay. In the US, there's a scarcity of, well, sorry, in the US, there's an abundance of capital. There's an abundance of experienced operators who come out of these universities who are very commercially savvy, like the Stanfords of the world.
mm,
There's an abundance of smart money, not just capital, but smart money. There's an abundance of, um, they're very mouthy. They talk to each other. There's an abundance of density in the network. There's an abundance of population, just a total addressable market. There's just an abundance everywhere. And they have a general abundance mindset because of some of that as well, right? They just believe they can change the world, many of them, right? Especially the entrepreneurial class. In Australia, it's characterized by scarcity. There's a scarcity of people. They are sparsely populated across a landmass the size of continental United States. There's a scarcity of capital. There's a scarcity of experienced operators. There's a scarcity of smart money. There's a scarcity, scarcity, scarcity.
Mhm.
And so that's what my post was about. There's an abundance of lifestyle factors, but a scarcity of everything else. And so, in many ways, that translates to a scarcity mindset, protecting the pie, not wanting to stand out, not wanting to share, not wanting to talk about your ideas, not wanting to bet too big and have too much ambitious, et cetera, et cetera. And in many ways, that scarcity is a rational behavior because these people, I'm speaking these people, I'm Australian, right? We live in a scarcity environment, and therefore a scarcity mindset and scarcity behavior is rational.
Mm.
And so I'm trying to be very clear and very fair here. These are not judgments about the people. These are judgments about the system, and actually not even negative judgments. They're just observations about the facts. And I'm actually trying to be very kind and generous to the people, which is that everybody's acting rationally given the circumstances that they're in. And so the only distinction I would draw is if your ambition is to build venture scale outcomes, of the kind you see modeled by Facebook and Uber and Amazon and OpenAI, then you must move your mindset and often move your physical butt to a place of abundance,
Yeah.
and stop pretending that you can act one way in the wrong market, or that you can overcome these things, by nature, irrespective of where you are. Now, I'll just one last point very quickly to be very fair. Most of my work is helping Australians and other people outside of Silicon Valley think and act more like Silicon Valley entrepreneurs, both in situ, like where they are, but also in many cases to act more ambitiously and physically move their target market or move their ambitions overseas. So it's not that you're dead in the water. It's just you have to shift your mindset, and in some cases, many cases, shift your business.
Yeah, absolutely. And I mean, there's no shortage of cities and even countries around the world where they purport to be building the next Silicon Valley, and they set up incubators and little precincts and whatnot where they can have more talent density. And credit to them for trying these things and for investing money into developing the local startup ecosystems. I mean, we have seen in Australia over the past 10, 15 years, like the amount of capital, while it's still scarce compared to, say, what you have in the United States, the amount of VC capital available in dry powder in Australia is, orders of magnitude what it was, say, back in 2005. And we have a lot more poster children, so to speak, to look up to, like your Atlassians and your Canvas and your Air Walletses of the world, which we perhaps didn't have in the early 2000s. We have about 140 companies with valuations over 100 million, which, they're not unicorns, but it is definitely a much more vibrant startup ecosystem than what we had. But at the same time, you pointed to the fact that Australia is pretty much the size of the continental United States, yet we have basically Sydney, Melbourne, maybe Brisbane, a few smaller cities. There's literally like 27 million people. And so in Northern California, somewhere like Silicon Valley, talent density plays such a big role. Chance encounters, you've got such a high concentration of ambitious people, entrepreneurs, investors, and so on, that if you spend time in that ecosystem, you're going to meet the right people, you're going to learn the right things, and your chances of success will radically increase. I mean, how important is that talent density, and that tight concentration of people that you have somewhere like San Francisco versus, say, Melbourne here, where Melbourne's a great city. Culturally, I love it. Music, sport, comedy, food, culture, art, fashion. Like, if you're into all that stuff, it's a great place to live. But at the same time, if you're an entrepreneur, I go out to startup events sometimes, and I I then come out of them thinking I don't want to go back to another startup event for a few months, because it's just oftentimes the ROI is just not there. The caliber of person I'm meeting is just not there, and it can get really, really frustrating. So how
Yeah.
Yeah, when it comes to talent density, I'd just love to know your thoughts on how important that is somewhere like SF versus somewhere like, say, Sydney or Melbourne.
Yeah. So let me address some of those things. So the first is you said it's changing and it's changed 100%. These things that we're describing are not static, right? When I left Australia, nobody was really talking about startups and venture funding and all this kind of stuff. And when I came back, it seemed like everybody was talking about it, right? But the reality is that Australia often, and not just Australia, I don't want to pick on Australia, any second, third, fourth tier market behind Silicon Valley, if you think of Silicon Valley as the epicenter, is 10 to 15 to 20 years behind Silicon Valley. And the rate of change is accelerating, right? And so, yeah, Australia is getting better, but it's still like lag, it's always going to lag. Maybe that gap closes, I don't know. What I've noticed is they're using the right terms now, like MVP and agile and VC and angel, all the right terms,
Mhm.
product led, right? But oftentimes they don't understand the deeper meaning of those terms or why those concepts work the way they work.
Mm.
What the economics are of a startup, what the risk profile is of a startup, the real differences between startups and small businesses, why an MVP is an MVP, and what you do after you ship an MVP. And which, let me tell you, it's not pivot, it's iterate and learn. And so, again, a lot of my work, a lot of our startup is, a lot of our podcast is about educating on the true meaning of these terms and going really deep to explain them so that they're not just terms, they're deeply understood and internalized concepts. We actually did a whole episode actually about how to start your own Silicon Valley or how to think about your ecosystem and make it more like Silicon Valley. But the reality is Silicon Valley, Silicon Valley. It's not going anywhere,
Yeah.
and it's not going to be replicated.
Yeah.
Now, to answer your question directly about talent density, this entire conversation and everything that I do in my advisory work is about maximizing probabilities. You're not guaranteeing success. Nothing I'm saying is black and white. Can you succeed out of Australia? Yes. Can you find talented people in Australia? Yes. Are there exceptions to everything I'm saying? Yes. The question is maximizing probability. Business is hard enough as it is, and startups are 10 times harder. You want to get every advantage. You want to get the tailwind, pushing you along. And so one of the tailwinds is talent density. When you go to a startup event, do you want 80% real estates, agents, former Sparkies, former bankers, former, traditional business operators? Or do you want 80% ex-Stanford grads, former founders, VCs, angels, experienced Google, Facebook, Uber, OpenAI employees,
Yeah.
right? What do you want? Just pick. And do you want to have to try to pick them out of the crowd and hope you find the right person? Or do you just want, like, everywhere you turn, it's like, holy you're doing what now? You work where now? You're
Mm.
inviting me to speak to who now? Right. And within a week of landing here, actually within 2 days of landing here, I was in a room with maybe 15 or 20 other people, having an intimate conversation, fireside chat with the head of AI, generative AI, no, AI generally, not just generative AI,
Mm.
at Meta. And he was saying, oh, I'm glad this is a small group. I can speak more honestly about this, and this. So now I have information that you can't get from YouTube. He will never share it in a public
Mm.
talk, never. Right. And so what is that worth to me? What is that worth to you? Right. It's kind of priceless. You know what Meta's thinking about, where they're headed, where the opportunity is, where the platform is going to cannibalize you. He has a back channel with all of the heads of AI and all of those companies. He's not just talking about his own personal thoughts. He's talking about the hundreds of people, synthesizing hundreds of people in Meta, the smartest people in the world, and his peers. He's basically giving me an insight into how the entire AI ecosystem out here thinks. And I'm not special. I just bumped into a person who bumped into a person who invited me to an event, right? And so this is the density and the opportunity of being out here.
Yeah, and that can essentially snowball over time as well. You meet one person who introduces you to another person who introduces you to another person, and so your network and the quality of your network grows. And so when you get to a point where perhaps you need to raise capital, or you're looking for perhaps a talented software engineer, or whatever the case is, you know who to speak to increase your chances of raising capital or finding the right people to recruit to your team. And of course, that increases your probability of success, Again, there are no guarantees, but it will increase your probability of success relative to perhaps an ecosystem where you do go to an event, and to your point, and there's nothing wrong with that, but perhaps you're meeting real estate agents and former bankers and former sparkies, not necessarily people who are well connected with the people you need to be meeting to get ahead. So
Yeah, and
earlier
we're
in the
only
conversation,
talking.
yeah.
Sorry, we're only talking about the networking side, right?
Mm.
Also, when you launch your product into the US, your users are well connected, well plugged into important companies, investors, and so on. And so while in Australia, you're chasing the few people who are geographically dispersed, who are mostly in services industries and real estate and small business, if you have VCs and Stanford professors and experienced operators in major tech companies using your products, what is the value of that, right? They're going to call you up and say, hey, can I help? Hey, can I invest? Hey, can I whatever? And hey, can I pay you in US dollars? And hey, can I speak openly and proudly to my friends about this because I don't have a problem with being a loudmouth, right? Culturally in the
Yeah.
US, they're what I call more mouthy. They just talk more. Like, I discovered this and I found this and this is better than the one you're using. In Australia, it's kind of like, hey, don't be too opinionated, dude. Chill out, man. Why are you so passionate about that? Why are you pitching us this product? You don't even, you're not even running that company.
Yeah.
Like that, none of that happens here. People are happy to talk about the stuff they discover. So it's a higher density, more mouthy, more affluent, higher value currency with people who are in a position to help you. And that's just some of the reasons why you should target the US perhaps first, if not fast, after you launch.
Yeah. So it sounds like the value of, say, a Silicon Valley based client or user is perhaps, on the weight of it, much greater than an Australian user, because that user could then loop you into their network of partners and clients and so on and so forth. Like, for example, that user could be a VC who's then going to plug in their entire portfolio of startups into your product, or at least loop them in and say, hey, you guys should probably check this out. And that can then have quite a downstream effect. Um,
Yeah.
so
But based on all of those factors, I would
mm,
say a US user is worth 5 or 10 times more than an Australian user.
okay.
And this is not popular, right?
Yeah.
I'm sometimes not a very popular guy because I'm very brutal about, these things. And people hear that and they hear me saying, like, how dare you say that a US person is worth 10 times an Australian person? I'm talking about pure economic terms here in terms of a user for your startup, right? And it's just, and I just want to, a lot of Australians look at me as a fellow Australian and go, man, that guy is such a tall poppy. Man, he's so arrogant. Man, he's so opinionated. But he's not factoring in all these other things. You have to understand where I'm coming from, which is I'm trying to help. I'm trying to be as clear as possible so that there's no platitudes, and I'm trying to download the data to people as quickly as possible. And I'm only speaking from a commercial point of view and from a venture scale point of view. I have a very particular religion when I'm speaking, and it's not about the warm and fuzzy personal side of it because I love Australia and Australian people.
Yeah. No, mate, look, the truth will ultimately set you free. And it's interesting when I look at LinkedIn in particular posts from people within the Australian ecosystem, all the comments are more or less reiterating the post. Very positive. Yes, that's great. Great point. Great point. Great point. Very rarely do I see dissent. And it's like, what are the chances that everything someone posts is absolutely 100% spot on? Either it's 100% spot on every time, which probably is not the case, or
Yeah.
people just aren't comfortable dissenting and having an opposing view and things of that sort. So when someone comes along like yourself who actually says, hey, here's the brutal truth, a lot of people don't know how to deal with that, but I personally find that quite refreshing when people do, because we need to hear the truth in order to best navigate the world towards a more optimal future. Otherwise we'll just delude ourselves and pat ourselves on the
Yeah.
back and tell ourselves that we're doing okay, but ultimately not really move the startup ecosystem forward, so to speak. So we did touch on, or at least you touched on, the concept of the underlying infrastructure and systems, geography, talent density. There's a lot of things in play that differentiate Australia from the US. When it comes to things like taxes, employee stock ownership plans, and things of that sort. Australia, for example, it's probably not a very entrepreneurial or entrepreneur friendly place insofar as taxes are concerned. Like if you're one of these few entrepreneurs that actually is successful and makes it, and you don't have a creative accountant or anything to that extent, you're basically paying 50 cents in the dollar almost in taxes, which can be a massive disincentive compared to what you might pay in some American states. I know California is not the least, probably not the most favorable tax jurisdiction in the states. There are places like Texas and Florida where you do pay a lot less tax, but how much do you think the underlying sort of regulatory landscape plays into the incentive for Australian entrepreneurs to actually build and grow their companies here as opposed to the States? I'll leave
Yeah.
it there. I've got some other thoughts on this, but I just wanted to park that there so we can go one by one.
Yeah. So there's a couple of things here. Just to be very clear, um, you're talking about, you're saying the states and the US in general. The
Mm,
states is very big
yes.
and it changes very much from state to state, city to city. Most of my comments are about, a Silicon Valley, a San Francisco and Silicon Valley and a New York, not everywhere.
Yep.
And let me be very harsh to the US now. Big parts of the US and large populations in the US are kind of barely better, if not the same or worse than third world country. People are desperate, they're struggling, they do not have basic services, and it is at best difficult for them, at worst disgusting. And there's a real culture war going on here. There's gun violence. Like, I want to be very clear. The US is not some utopia of whatever. Again, I'm talking about commercial outcomes, venture scale disruption, and I'm talking mostly about Silicon Valley, maybe New York, that kind of thing.
Yep.
Also, you mentioned taxes, and then at the end, you mentioned regulations. And those are two obviously important, different things. Um, Let me talk about taxes first and regulations second. The taxes in some cases, especially in California, appear to be more than in Australia. And I'm no tax expert, so take a lot of what I'm saying with a grain of salt. Um, but what I find is in the US, what's written on the tin is not actually what happens. There are massive, massive loopholes written into the law for companies to take advantage of and wealthy people to take advantage of. And so whatever you think the rate is or whatever you think the model is, if you scratch the surface a little bit, there is a lot of tax optimization strategies that result in a very different outcome than the one that you might kind of see on the surface.
Mm,
And that's deliberate, right? These laws are, when I talk about all the problems the US has, this is another one, which is that these laws are written by lobbyists and corporate interests and special interests, and they're written with massive loopholes included, both for the taxes side and the general regulation side. This is catastrophically bad for the general population and unfairly good for the entrepreneurial builder founder class. Again, it's about optimization, right? And so, which is a good segue into the regulation side. Part of the problems in Australia is not just the taxes, it's the regulation. It's everything is regulated within an inch of its life. It's kind of like a paint by numbers. It's like, oh, you want to do thing in B3? This
yep.
is the color, this is the space, this is the thing you have to you play in, and you color inside those lines, and you sit down and you shut up. Like, that's it. And then there's a deference to authority of like, well, I was told that the size of the square is this and the color is this. I'm going to color it in that color,
Mhm.
right? And so the combination of the very prescriptive regulations with the very high degree of deference to authority means that people are just painting the same picture over and over again, and not pushing against those instructions very well at all. Um, and again, here in the US, there are states with more lax regulations, and there are loopholes that big enough to drive a startup through. And they present massive, massive opportunities, just massive opportunities,
Yep.
for better or worse, because individual citizens are suffering, and founders and builders and entrepreneurs have an opportunity to alleviate that suffering with their private entity, their private solution, right? And so, you know, disruption and value creation is in solving problems. And so there's plenty of problems here to solve for plenty of people.
Yeah.
for better or worse.
Yeah, it's interesting on the regulation point. So I run a content agency that works with startups, and we were working with a fintech, and basically almost everything we tried to do, their banking licensee pushed back saying, "Oh no, that might be construed as hawking, and so we can't do that." And basically all of these things we're trying to do to actually promote this company, we're getting pushback on, which ultimately serves to protect incumbents more than anything else, because
Yep.
they're out there, they're growing, they've got their brand awareness and all the rest of it. But then a challenger comes along and it's like your hands are essentially tied, and there's only so much you
Yeah.
can do to grow your
In-
customer base.
yeah. In the US, they call this regulatory capture,
Mhm.
right? And so the big companies, in this case, banks, they design the regulation in Australia as well. It's just less crass and direct than it is in the US. They design it around their business model, and they convince the population and the government that this is extremely risky, and we're the only ones who are competent enough to do it. And that defends and deflects and builds a moat around startups and challengers.
Mm.
I'll give you just an example. It's a weird example. Someone gave it to me, and it's the clearest one that I have. It is a weird one though. In Australia, well, in the US, there is all of this kind of like law around separation and divorce and whatever. And if the thing is, things are not in your name, it's often harder for the government or your former spouse to get their hands on it. Again, for better or worse,
Mm.
right? But there are all of these loopholes in which you can structure things so that you protect yourself, even over and above a prenup, right? In Australia, the law basically says if you have functional control over that money or asset, it's part of the pool of things we evaluate in order to give it to your spouse, right? And again, I want to be very careful here, looking after your former spouse and having a healthy divorce and not screwing your partner. And these are all the right thing to do. But I'm just giving an example
Mm.
where the Australia writes the law in such a way that it's just a giant vague thing, which is if you are shown to have functional control over an asset or cash, it is included in the pool of evaluation. Period. Full stop. It's not if it's in your name, but not in your mother's name, and if it's in this thing, but not that jurisdiction, blah, 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 blah. It's just drawn really broadly, and it's really egalitarian, really fair, really balanced. Unless, of course, your partner's screwing you, right? And trying to grab every last penny, right? And so there's winners and losers in every one of these transactions, but that's just the way the system is designed here.
Yeah, absolutely, mate. I wanted to change gears and just talk about the Australian investment ecosystem as well while I've got you. And I believe it was Cliff Obrecht, the co-founder of Canva, who essentially said that Canva will be listing on the Nasdaq in 2026, or at least that's their goal. And this was essentially because Australian investors don't understand tech as well as US investors. Because over in the US, you're dealing with investors who have experience with companies that have many multiples, their revenue in valuations, essentially like high multiple growth company experience, versus in Australia where you only have so many sort of unicorns and whatnot. So
Mhm.
we have, like I said, seen billions of dollars come into the Australian startup ecosystem. We have successful VCs like Blackbird, for example, who were early on Canva. And as far as returns are concerned and internal rate of return, if you look at Blackbird versus many other VCs, whether it's Sequoia or A16Z or whatnot, they're actually quite competitive. Of course,
Mhm.
there is a massive skew there. Like if you take Canva out of their portfolio, that number comes way, way down. But what are
Mhm.
your sentiments on the Australian sort of VC and or angel landscape? Obviously, two different things with different sort of experiences and whatnot behind them. But insofar as their sophistication is concerned, compared to what you do get, obviously, in places like Silicon Valley, where you do have people like Bill Gurley, for example, from Benchmark, who incidentally has been on the warpath against regulatory capture, something you mentioned a few moments ago. But yeah, what are your thoughts on the sophistication of our investor ecosystem here, Chris?
Yeah. So once again, lots to unpack here. So we talked about scarcity earlier, right? So there's a scarcity of smart money and a scarcity of understanding amongst the investor class and the general, retail investor about what it means to invest in a high growth company and what a venture scale outcome looks like and why you might pay a higher price to earnings ratio. And so it makes perfect sense what he's saying, that they would list in the US. Like, of course you would, right? But this applies downward pressure to the entire ecosystem, right? So all valuations from angel all the way to IPO are based on that pipeline. There's a scarcity of acquirers in Australia. Business, large companies who will buy or purchase from startups. There's a scarcity of exit options. There's a scarcity of IPO outcomes and possibilities in the country, right? You have to go overseas. There's a scarcity of retail investors, institutional investors who know how to invest in this thing. And so all that applies downward pressure on all the valuations all the way down, right? Over and above everything we just talked about, experience in operations and market size and everything. If you talk to Nick Crocker, and we have on the podcast from Blackbird, his opinion is like, there's crap loads of capital in Australia. Chris, what are you talking about? We have so much capital. We're awash with capital, right? And it's like, yeah, but it's in a few people's hands. And those people are still more risk averse than Silicon Valley. And they're only making a few bets at a time. And their LPs, they're the investors of the investors, are telling them, we need revenue, we need B2B, we need it de-risked, we need this, we need that. These are like pension funds, right? Australian pension funds. And so, many of the VCs, I'm not speaking about Blackbird now, many of the VCs, their hands are tied. They actually have no choice but to invest in glorified businesses, traditional businesses, rather than venture scale businesses, because that's what their LPs are forcing them to do. And because there's downward pressure from the IPOs and secondary, Series A, Series B, Series C, and so on. So that entire pipeline of value creation and equity growth is just missing. And so once again, I'll tell you that they're acting very rationally in a game that is very different than the one they think they're playing.
Yeah.
Yeah. And so I don't know, what was your original question? It was, sorry.
Yeah, I mean, I think you kind of answered it essentially on the sophistication or lack thereof of the Australian investment.
Yeah, it's not sophisticated.
Yeah.
It's not, I mean, again, a lot of my work and the podcast that we run, the Startup Podcast, is about trying to educate investors about how they're behaving and why it's counterproductive to the outcomes they're looking for. I'll give you an example. A lot of these investors come from a world of like, they're not investing, they're business partners. They want 30, 40% of the 50%, 51% of the company to maintain control. What they don't understand is they're investing in the founder, and they need to maintain motivation for the founder. And they need to be investing in equity growth, not control, right? And then they're trying to compress the valuations, right? Oh, okay, well, we'll take 20%, but we're only going to give you, a small amount of money because we don't want the valuation to get too big. Well, hang on a second. What I need to win the category is twice or three times that. So you're just investing, you're giving me a short sheet. You're giving me a queen size sheet for a king size bed. What's the point of that? You're pissing away your money because we still haven't covered the bed. I'm going to run out of money before I execute what I need to execute. And we're going to end up trying to raise a bridge round or be a zombie or try to chase revenue instead of growth. Yeah. And so these investors are shooting themselves in the foot and limiting their upside. And there's just many, many ways that you see investors in Australia doing these kind of deals with these kind of terms that are undermining their outcomes and their multiples. And it's obvious on the face of it. And so, yeah, it's because they don't understand what game they're playing. And they don't understand the startup economics.
Absolutely. And I guess some people might argue that you've had the opposite of that in the States over the past few years.
Yes.
Not so much this year or last year, but up until about 2022, where multiples were sky high and perhaps unsustainable. And it was almost like a pyramid scheme. It's like, who's going to end up holding the hot potato? Of course, that's come down now, but perhaps there is a little bit to say about the downsides of that exuberance that you see over in the United States when it comes to valuations.
Yeah, I mean, there's ZIRP, right? Zero interest rate phenomena, and there was a lot of froth. And I was talking to a VC friend of mine at Greylock, and she was saying, Yeah, we used to turn around term sheets in 3 days and do very little diligence, and we had to just get into the deal as fast as possible.
Yeah.
And she's saying, like, now, even with AI companies, we're doing a lot more diligence. We're digging a lot deeper. We're taking our time, and that's yes, that's great. Again, it's very easy to listen to me and go, well, but what about this and what about that? And
Mm.
the reality is that there are more bets being placed, more enthusiasm, and yes, is there excess and there are other bubbles in the US? Absolutely. But I would almost rather that than living in a constant state of scarcity and fear. So I would rather straying into irrational exuberance and being a rational actor in that world, or being more rational, than living in this kind of straitjacket world where there is no exuberance and
Mm.
there's no, I was asked by an investor group to evaluate an early stage startup that I was advising and to give them the down low on what I thought about this company and the upside. And I'm like, guys, these founders are ex-military. They know how to get a mission done. They have no idea how to build a startup at the beginning. They had no idea. And yet they recruited me and they recruited all these people, and they have an incredible product in market that is growing rapidly. They're growing into a really powerful, large, and important domain. Like, what more do you need to know? This is an early stage startup, right? You're not even investing in the product. You're not even investing in the idea. You're investing in the people. And these people have shown, both in the military and in the startup, that they know how to get a mission done. They will pursue it until they win, and they know how to recruit people, how to build a team, how to learn what they need to learn, how to assemble a vision and a mission and get stuff done. What are you waiting for? Like, what are you waiting for? What's left? This is an early stage startup. And I'm like, invest in the founders. That's it. Period. Full stop.
Yeah,
And so that kind of enthusiasm is just missing. It's missing.
it's funny, and I mean, ultimately, the flip, I mean, the paradox there is, if the company was an absolute sure thing, then you wouldn't get those crazy venture scale returns. It's like, the more certain something is, you don't get the same rewards. For example,
Yeah.
this goes back to the conversation we're having about, LinkedIn and people just saying niceties. There was someone from the fintech community talking about, the high rates of failure amongst fintech startups, and how, 90% is even too high. This isn't America. Like, 90% might be okay over there, but not here. And it just seemed like a very sort of, it sounded like a very egalitarian. Look, to his credit, he was thinking about people. There's people behind these companies that have families, and my
Oh
comment,
my God.
exactly, that was my sentiment. But my comment was, look, if you want people to have a sure thing, and you open a barber shop in a new estate that doesn't have one yet, they're not going to make venture scale returns. They'll put food on the table. Maybe they'll make 100K a year. It's certain. It's predictable. But if you are going to go for venture scale returns, if you are trying to disrupt incumbents, then obviously that's going to come with a hell of a lot of risk. And that's just the nature of the game. Like, sure, there are things you can do to decrease your risk of doing things incorrectly, and perhaps going after markets where you haven't tested your assumptions. And you mentioned doing things like, building MVPs and whatnot, but that just means you're going to fail earlier, perhaps, as opposed to, spending $1 billion
Yeah.
to fail. So
I mean, this is connected to the cultural problem at multiple levels, right?
yeah.
It's looking at failure as a bad thing. It's
Mhm.
thinking that failure puts families at risk. It's like all of this, overwrought stuff. It's miscalculating and misunderstanding the nature of risk and the nature
Yeah.
of the economic model known as a startup. That comment is so devoid of insight. I'm
Mm.
sorry, it just is,
Yeah.
right? Um, Failure is not just okay. It's part of the process of success, right? Startups run hundreds of experiments, and the faster they can get those experiments to fail so they can find the right answer, the better they are. The
Mhm.
better the startups are. They're learning machines. They're experiment machines. Their job is to experiment, fail, 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 find the right path, next step. Experiment, fail, 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 find the right next step. And meta, the entire entity is designed to fail move on to the next thing, the next idea, the next team, the next opportunity. That is the point of a startup. It is not a small business. It is not something that your entire family's livelihood should be caught up in. It is not a thing you should have a whole bunch of angst around. It's not something we should be aiming for 90% success rates. This is just not the game.
Yeah.
And you know, yeah, it's very frustrating. And until and unless we get out of this mindset, the other part that he said that is wrong, this is not America. No, it is the world though. And America is kicking our ass in terms of venture scale outcomes. And so if we want to be the lucky country, the smart state, the whatever the hell, and we earnestly believe in that, then we better bloody start having failure rates and investment rates like America.
Yeah.
And so, yeah, it's not America. That's not what it's optimized for, to go all the way back to the beginning of our conversation. We either find ways to optimize our culture to be a little bit more American-like in the right ways, or more likely, the people listening to my voice right now who want to have an American-style outcome need to start thinking, acting, and potentially moving to America. And more specifically, Silicon Valley or New York, something like that.
Mm-hmm. Mm-hmm. Yeah, and it's not America, but it is the world, and it's also the universe. And there are universal truths like the Pareto principle, 80-20. You're going to have 1% of inputs creating most of the outputs. And that applies across successful authors, musicians, comedians, startups, and so on and so forth. Like, you cannot get an equal distribution unless you have the government come in and say, okay, we're just going to redistribute wealth across the entire board. So on that topic, and we've only got a few minutes left, so I'll be conscious of your time, Chris, and let you go. You did say earlier that you identify as someone who is small L, liberal, progressive, and yeah, basically that. Now, over the past few years, we have seen CEOs like Brian Armstrong, for example, at Coinbase, Daniel Ek at Spotify, push back against a lot of sort of social justice activism that can be quite pervasive across companies, especially in Silicon Valley. And Armstrong's point around this was he feels like it can create a lot of internal dissent and resentment, and ultimately distracts companies like Coinbase from their core mission, which is to solve a very big problem, which in and of itself is a very difficult pursuit. Now, in Australia, I've noticed across Startup Victoria and various other organizations, there is a real push towards a lot of quote unquote virtue signaling and saying the right things and doing the right things and ticking the right boxes. But is this, in some respects, it's a noble pursuit, but is it also a distraction from the job of building great companies?
Mm. Look, this is a very
A
deep
very hot button question.
and hot button discussion, and I'm not afraid to have hot button discussions. It's hard to wrap it up neatly in 2 or 3 minutes.
Yeah.
I'll speak in some generalities, but I'll try to be as pointed as possible.
Mm-hmm.
I believe that there have been certain classes of people who have been systemically disadvantaged by our Western society.
Mm-hmm.
And they have, generational trauma and disadvantage built into the system. And those people deserve their day in the sun. They deserve those systems to be, if not dismantled, but reconstituted, refreshed, refined, and improved. And to the degree that, wokeism or social justice worrying is about the appropriate and balanced refinement, readjustment of those things, it is a good thing. However, where those things become unbalanced and actually start being counterproductive, and our discussions in our companies become all about that, and our discussions become silenced, and the nuance becomes unpopular, and the collateral damage becomes too great, that's when we start tipping into a problem. And then where this kind of the woke mind virus term starts to become relevant and appropriate. In the swinging from one phase to the other, there will be collateral damage. And some of that damage is okay, right? We're like, let's say, just pick women, for example. Women have had a lot of collateral damage from a, patriarchy for a long time. And as that swings back into the middle, there'll be an overcorrection, and there'll be some collateral damage amongst the men. And that's okay for a short period of time. There's been plenty of collateral damage on the other side, right? But that pendulum has to correct. Due process has to be reestablished. The investigate all claims instead of believe all women, right? There's a difference there, right? And an important one, because due diligence is important, right? And so I believe there is a very subtle, nuanced line here where some collateral damage is okay, but we need to find the balance in the middle. And we need to both improve society while protecting meritocracy, competence hierarchies, and effective execution towards solving problems. So there's some broad principles for you. I'm perfectly happy to talk very deeply with this and talk about things that some people might consider career limiting or hot button issues that you shouldn't talk about. I don't care. I always share with the intent of shared understanding and moving the conversation forward. Oftentimes people will say, well, you're a man, you can't talk about that, or you're white, you can't talk about that. Well, actually, I think I'm actually Middle Eastern, so I'm actually technically brown.
Yeah.
I've never thought about that my entire life, that I'm quote unquote brown. Probably that people say, you're white passing, for example. I don't give a crap what your race, religion, or gender is. You should be able to participate in the conversation. But you should also listen carefully with empathy. And we need to find a great middle ground between us all, because we all live on the planet together.
Very, very well spoken, Chris, and perhaps a great place to end this conversation. Appreciate your integrity and honesty on all topics discussed today, and your just willingness to actually say what you really, really think. And ultimately, integrity is there being no disconnect between what you say, what you think, and what you do ultimately. And I think more people can definitely benefit from behaving in such a way. So if people enjoyed today's conversation, which I'm sure they did, they can get more of Chris Saad over on the Startup Podcast. You guys are pumping out several episodes a week by the look of things. So lots of great content on there. Is there anywhere else you'd like to direct people to, Chris, before we wrap up?
Yeah, you can visit the podcast at tsp.show, or on many of the social networks. We have a page set up. Also, for me personally, you can visit me at chrissaad.com, and Chris